Hi everyone, Ajaz from Focus Finance Solution. In today's video, I will be answering your questions as they relate to the new recovery loan scheme. Firstly, I just want to say thank you for your positive response to the previous videos I've done on this topic, explaining the scheme and also how to apply. Before we dive into your questions, please give this video a thumbs up and give this channel a follow by clicking the subscribe button so you don't miss any future content. Also continue to comment on the videos. If you wish to discuss any of your circumstances as they relate to this scheme or any business finance or property finance, please do get in touch using my contact information in the video description, and I can offer you the free consultation as I always promise. With all that out of the way, let's get to work. So the first question you've asked is, how much can I apply for? So the minimum facility size, it varies. So the minimum facility size goes from £1,000 to up to £25,000. The £1,000 is more for asset finance, invoice finance, and the £25,000 is more for term loans and overdrafts. The maximum value of facility per business depends on various factors. So it can be the lesser of 10 million or 30 million if it is a group, if you're a large group of companies, or double the business's wage bill of 2019 or last year's available, 25% of applicants' turnover in 2019, or the applicant's liquidity needs for the coming 12 months. For large enterprises, or 18 months for SMEs. So if you're a small business watching, 18 months. If you're a large group, then 12 months. If a business or any of its linked or partner enterprises, including private equity and venture capital linked enterprises, have borrowed under the C-bills or CL bills, then this will count towards the business's maximum amount that they can borrow. I hope that answers the question, explains. The next question is, what can an RLS facility or the Recovery Loan Scheme RLS facility be used for? So the simplest answer to this question is an RLS facility can be used for any legitimate business purpose, but it is not limited to managing cash flow or investment or growth purposes. So as long as it's a legitimate business purpose, you can use this loan, the money you get from this loan, to use for that. The next question is around fees and interest rates. So what are the fees and interest rates that I can expect? Interest rates and fees charged by the lender will depend on lender to lender and the type of facility they're offering you, and what the lending proposal is. Lenders are required to pass the economic benefit of this scheme to the borrower because of the government backing. So expect the rates to be quite competitive, but again, they can vary lender to lender depending on the high street lender or more your challenger lenders. Always advise, well, please speak to the lender, ask them about the rates and fees upfront, and they will be able to give you that information upfront. The next question is around, can a business benefit from multiple facilities across different product variants? So as you know, with this scheme, it's not just term loans that this scheme offers. This scheme also offers overdraft, asset finance, and invoice finance. So that's why this question was came across. So the answer to this question is yes, subject to meeting the scheme eligibility requirements and provided you do not borrow more than the maximum amount you are entitled to. The maximum amount a business can borrow, I answered that question earlier, across different facilities, though this one is more relating to, will depend on the lender's assessment of your affordability and the scheme's requirements. So again, that can vary lender to lender when it comes to affordability and facilities and the type of products you're applying for. Can a business refinance their bounce back C-bills or CL bills facility in part or in full? and or any of the existing commercial facilities. So can RLS be used to consolidate or refinance other facilities that you have? The simplest answer is yes. Existing bounce back borrowers are able to refinance under the RLS. However, it is lender's discretion. Also, it is all based on the affordability criteria with the lender. Now, depending on the lender's affordability assessment and the scheme requirements, the decision can differ. And one of the examples I'll offer you is where a business is seeking to put itself on a more stable financial footing and to improve working capital position as you move forward now, as we're on the road to recovery. An RLS facility could be provided, providing the business fulfills the scheme's eligibility criteria. So again, the refinancing can be undertaken without the additional amount, or you can just refinance the existing amount. Again, a conversation to have with the lender, and again, each lender will view it differently and what the risk appetite is. But yes, it is an option and it is available, but do discuss that upfront with the lender. The next question is, what types of businesses are eligible for this scheme? So, provided that you satisfy the eligibility criteria, the RLS scheme is open to sole traders, corporations, limited partnerships, limited liability partnerships, cooperatives and community benefit societies, and any other legal entity carrying out activity in the UK and using a business account. So if you are a business, whether it be sole trader, limited company, partnership, or other entities I've just described, you are eligible to apply for this scheme. The next question is around, is this scheme appropriate for startups? And the answer to the question is yes, but again, it is at the discretion of the lender and meeting the scheme eligibility criteria. For early stage businesses in their first 2 years of trading, there are other programs available as well, where you can borrow from as little as £500 to £25,000 as very competitive rates. I have included a link in the video description for startup loans, which you can check out if you're a startup business and find out more about these other loan schemes. Hope you find that useful. Another question that was posed was that, do I need to provide evidence that I have a viable business? And this is a very, very important question, and a lot of you have actually asked and how to do that, considering businesses being suffering because of COVID and the pandemic, and how do you do that? So a lender will consider your business to be viable, and when making their assessment, whether to lend you the money under the scheme or not. They have the option of disregarding the concerns over what has happened in the last 12 months. So if, say, your business suffered because of the pandemic, the trading wasn't as great or whatnot, and the performance wasn't wonderful, they have the discretion to disregard that and look at that as a future. It will all come down to what kind of business plan you're providing them when you're applying. It all come down to the cash flow forecast you'll be applying and the turnover forecast. And it's just making a case for yourself when applying for it that will make a difference. Also, the business will look at the past activity, so pre-COVID activity, if you're a longer trading business. So they will look at your pre-COVID activity during the pandemic activity, and if the activity had dropped because of the pandemic, they can disregard, and you can still succeed in qualifying and getting this RLS loan. But the other thing to always also keep in mind is that lenders are not required to overlook the concerns on all final decisions are still fully a lender's criteria. So some lenders will disregard them and other lenders may not disregard. So all lenders are not obligated to disregard the activity in COVID. All depends upon what sector you also trade in, and again, at the lender's discretion. And one thing which is very, very important when you're doing this, when you're telling the lender that you've been impacted by COVID, you are, in theory, you're self-certifying that your business has been impacted by COVID. So please keep that in mind. It's a very, very important point. When do I start repayments, or when do I start repaying the RLS is the next question we have. So again, a question that is dependent on the lender's own policy, and this can vary lender to lender and the type of facility you have. So for example, some lenders may offer capital repayment holiday for a period of time just to help you out to get back on your feet. But this is not a standard feature of this scheme. Again, it's at the lender's discretion, so have that conversation with the lender you're applying with. The same applies to interest payments and other lender levied fees, which will be the responsibility of borrower to discuss with the lender at the outset. So have that conversation. Interest payments and capital repayments will commonly start a month after you have taken the loan. So normally 30 days after the loan draws down, you start making payments. Unlike bounce back and C-bills, the government does not provide the 12-month business interruption payment for this RLS. So unfortunately, you don't have that facility available. But again, like I said earlier, lender may offer you a period of a repayment holiday. Again, a conversation to have with the lender. So guys, hope you enjoyed the video and you found it helpful and it answered some of the questions for you in regards to the new recovery loan scheme. If you wish to discuss things on a one-to-one basis in greater detail, please do get in touch with me. As always, please give this video a thumbs up. Give this channel a follow by clicking the subscribe button to be updated when future content comes out. Also, leave us a comment, feedback, and send us your questions and what would you like to see in the future. Thank you so much for watching, and I will see you next time.